Hello, this is Brian Resney, President of Resney Wealth Management, bringing you an important update about the economy and the investment markets. Of course, we're just slightly off the highs of most of the equity markets year to date. Had a decent sell-off over the last day or so, again because of tariffs or proposed tariffs. I've had a lot of questions from clients about tariffs, and I will tell you, if you look at how the U.S. is structured, we've been the piggy bank of the world in unfair trade for decades and decades. And again, you could thank your incompetent politicians on both sides of the aisle. This President Trump, he wants to get these things fair. Equal fair trade is positive for the U.S. economy, positive for businesses, and ultimately positive for the consumer. A little pain in the short term, in our opinion, is well worth long-term gain and opportunity. So we believe in what he is doing currently. We'll see how this progresses. I think especially on the China side, which is the biggest culprit of all problems, not only with trade, but also intellectual property theft. I think that could take quite a bit longer into next year. With that said, we are making a couple adjustments in our portfolios just to kind of maybe soothe some of the downside possibility of pain and hopefully increase some of the upside opportunities that we see. Earnings have been good so far this year. Interest rates are fairly stable. We expect another one interest rate increase this year of a quarter point. I firmly believe that's going to happen. But generally speaking, inflation is pretty flat to tame, close to the 2% target on the Fed. Again, this is one of the areas that we've talked about a lot. The Fed is not going to just keep moving rates up. They're going to do them in a stair-step manner when they see fit. And when they feel they should back off, I think they will. When they feel they should raise, they will. And again, this will hopefully stabilize not only the overall economy and some of the volatility, but what's going to ultimately happen is this. I don't see really high interest rates, 5 or 6% as an example, on the 10-year. I think could we get to maybe 4%? That's a possibility in the next couple of years if the economy keeps ratcheting up. But other economies around the world are kind of really no growth at all, especially in the Europe sector. Many of you may or may not know, I just got back from a trip in Europe, which of course, business as usual, even when I'm on vacation, always talking to business people and consumers in these other countries to get a feel what they think and what they feel. I've discussed some of these on our last update with clients at our luncheon, and I'm going to talk about it again, of course, on Thursday. These are areas that are very interesting. When you look at how other countries are structured and the quality of life they live, always be glad you're a U.S. citizen and you live in the U.S. Even on a bad day, it's multiple times better than most other countries' great days, that I can assure you. We don't see signs of recession. We see signs of growth in the U.S. economy. We're going to see continued volatility and maybe a little bit more volatility as we get into the later part of the year. But again, we like what we see. We like the unemployment numbers. We like the business growth. We like deregulation. We like what's happening with our economy. And we firmly believe if investors are invested correctly, you're going to be happy people over the long term. Allow us to do our job. Remember, normal volatility and pullbacks are going to happen throughout any calendar year in all asset categories. All investments have risk, but we firmly believe we're invested in the proper areas to provide growth and income, not only for our income-oriented clients, but our growth-oriented clients in addition. If you're a client of our firm and you have any questions, please give me a call. And of course, we always appreciate your business and we really appreciate your referrals. Have a safe and profitable day.